So now that you are entering your 30s or perhaps already in your early 30s, what important financial goals should you be focusing on? The decisions you make in your 30s will shape the rest of your life. So let me start by saying that I won't be focusing on how much money you should have saved by your 30s or how much debt you should have paid off. That isn't the goal of this video. There is already so much pressure foisted on us by social media and society in general. The aim of this video is not to make you feel any worse. Instead, I will focus on the broader financial goals that you should look to achieve in your 30s. If you're new here, hello and welcome. My name is Jumoke and I am an investment banker turned early 9-to-5 retiree. On this channel, I share some of the strategies that I applied to manage millions of dollars for some of my ultra high net worth clients. We also talk about all things personal finance, financial freedom, as well as self-development. If that sounds interesting to you, do not forget to hit the subscribe button, click the notification bell so you don't miss new videos every week. The first goal to achieve in your 30s is to become financially independent from your parents. Now, this is a very sensitive subject because some people believe that you should have cut that financial umbilical cord in your 20s, whereas other people believe that that is near impossible to do today. The reality is that it is getting harder and harder to do this, and times have changed. In the UK, the average salary in your 20s is around £32,500. And in your 30s, that is just under £40,000. And this is a gross figure, which means that this is your pre-tax income. According to the Office for National Statistics and Consensus Bureau, many young adults in the UK and the US still live with their parents. In fact, according to a Merrill Lynch report, over 60% of young adults will receive some sort of financial backing or assistance from their parents. With the ever-rising house prices, rent increases, inflation, and changes in laws and regulations that frankly aren't always helpful, it's no wonder that this is the case. So maybe it is your phone bill or your health insurance, or maybe they've bailed you out on rent again. And whilst it is very helpful, the truth is every time you lean on them financially, you are putting your own growth on pause. Financial independence does not mean you cut ties. It only means you're gaining confidence and eventually get to financial freedom outside of your parents. And whilst your parents love you and their help comes from a place of care, now you're in your 30s, it is time to start owning your life fully. Becoming financially independent is one of the most empowering gifts that you can give to yourself and your parents too, because not only will it ease their financial burden, it will also help them worry less about you as they age, knowing that you can fully look after yourself. The second financial goal that you should look to achieve in your 30s is to build a career that you love and will make you money. Your income is going to be your number one tool for wealth building. So it's certainly worth the effort to find something that you love to do, that you think you can do over the long term and will make you money. I believe your 20s are the years for self-discovery and freedom. I spent my 20s grinding away at work and building my career. I was laser focused on getting my dream job in my dream company. And so I didn't have a social life and I worked really long hours. And even though I did all of that, I really wouldn't recommend that level of intensity for someone in their 20s. Instead, I would say, of course, work hard and be focused, but explore options and spend the time building your network and getting to know people. And as you get into your 30s, then you can begin to narrow your focus. Because the older you get, the harder it becomes to switch between careers. You might need to learn a new skill or maybe even take a huge pay cut. And most people aren't willing to make the shift or even take the risk. The sad reality is that there are a lot of people who don't like their jobs but make good money. On the other hand, there are individuals who absolutely love their jobs but don't make enough money. And so if you can find that sweet spot between liking your job or even loving it and making money, you're in a great position and you're definitely on the right track. So please do not spend your 30s in a job that you don't like, because it would give you little motivation to want to move up the corporate ladder, which of course means more earnings. And don't forget, you cannot get these years back. So get out there, speak to people, get informed, find mentors, be ready to pivot if you have to. And if possible, find a job that doesn't make you dread every Sunday night thinking about work on a Monday morning. The third financial goal that you will want to hit in your 30s is to start building your personal balance sheet. Your personal balance sheet is a term that can be used to describe the things you own versus the things you owe. That is, your assets and your liabilities. Now that you're in your 30s, you are most likely earning more money than you did in your 20s. So I want you to think about your income as a stream that keeps flowing into a reservoir that is your assets. So don't spend that extra income that you're making in your 30s on things that don't last. Instead, you want to put that extra income into this reservoir to make it larger over time. And I say this because it is so easy to allow lifestyle inflation eat that additional income. You're earning more, but you're still living paycheck to paycheck. And unfortunately, if you carry on spending that extra income that you're now earning in your 30s, you will end up not having any more money than you did in your 20s. And so you do not want to end up spending your 30s working really hard only to end up in your 40s with nothing to show for it. And so this is the time to start putting those good wealth building habits into practice. When you start making more money, try to keep your expenses low. Don't start buying expensive things just because you can. If possible, try to maintain the same standard of living you had before. I'm of course cognizant of the fact that this is very much dependent on your personal circumstances, whether you're single, married, or with children. But the bottom line still remains. Keep your expenses low so you can use the extra income to build wealth for yourself and your family. Use that incremental income to buy assets like rich people do, so that if for any reason that income stream stops flowing, you are covered by the reservoir of assets that you've built over the years. The fourth financial goal that you will want to focus on in your 30s is to get on the path of zero debt, or to achieve zero debt by the time you're 40, with the exception being mortgage debt, because it might take you more than 10 years to pay this down. So in this sense, we are talking about consumer debt, credit card debt, student loans, and ideally no auto loans either. And this is because the average car loan in the UK was £12,482 as of 2023, and in the US, the monthly average auto loan as of June 2025 is $745. And don't forget that most cars are depreciating assets, which means that they lose value over the years. Imagine saving hundreds or even thousands every single month and putting that into investing as opposed to paying off your debt. And so in your 30s, you want to do everything you can to ramp up your wealth and not have consumer debt dragging you down. This is most likely the time when different areas in your life intersect. So you might get married, you might have children, you might have elderly parents that depend on you. And so your responsibility level rises. And unfortunately, debt can add an extra layer of complexity to your life. Because if you still have considerable debt in your 30s, maybe going into your 40s, you most likely won't be able to do many of the things that you could do for yourself and for others if you were debt-free. The fifth financial goal that you will want to hit in your 30s is to get your retirement planning on track and take advantage of free money. Well, this is actually something that you could start in your 20s, but if you haven't started, fear not, you could start in your 30s. If you are employed, you are most likely entitled to a pension contribution by your employer, as long as you are opted into this option at work, and additionally, as long as you keep making the required level of personal contributions. Although this mightn't be your near-term priority, when children and family are concerned, you may want to consider this option because it still remains one of the most efficient ways to prepare for retirement by a long stretch. And what's great is that your retirement account can receive an extra boost from the pension tax relief that you get on payments into your personal pension. In the UK currently, anyone under the age of 75 can receive pension tax relief when they make a contribution within the annual allowance into a personal pension like a SIP. And the government then gives a 20% bonus on top of that. And this is specific to SIP accounts. And this is why I talk about taking advantage of free money. So for example, every £80 you contribute into your SIP account, the government then adds £20, which results in £100 total contribution within your SIP. And what's more is that higher rate taxpayers, so for example, those who pay 45% tax, can claim additional tax relief through their self-assessment tax returns. This is potentially a simple way of decreasing your income tax bill for the year. And if you think about it, this additional boost from the UK government can make a significant impact on your investment pot and ultimately your total retirement funds. The next financial goal you will want to hit in your 30s is tracking and improving your credit score. A credit score is a number or a metric that lenders use to essentially decide whether you are reliable in repaying your debt. It's like a financial version of an Uber rating or an Airbnb score. It measures your credit worthiness. And that number or that metric will range according to your location. So for example, in the UK, our standard range is from 0 to 999. And in the US, the standard score is something called the FICO score, which ranges from 300 to 850. Now, this is one scenario where more is more. The higher your credit rating, the better. And this is because a high credit score can save you thousands in mortgage fees, because a credit score is one of the metrics used by lenders to determine your mortgage rate. And even if you don't plan to buy a house, your credit score can be used by a landlord to determine whether they want to rent a place to you, because some rentals have minimum credit score requirements. Also, some insurance companies do use customers' credit scores to determine their premiums. And there are other ways to benefit from having a high credit score. And some of the ways to improve your credit score include paying your bills on time, getting on the electoral roll, limiting credit applications, and using secured credit cards. The next financial goal that you will want to focus on in your 30s is starting a tax-shielded account for your children if you plan on having them. In the UK, you can use what's called a JISA, a junior individual savings account, which allows you contribute up to £9,000 every year. And your child can have access to this account when they're 16, but can only withdraw when they're 18. And they can use this capital towards buying a house or maybe going into further education when they're older. Or if you are in the US, you can start what's called a 529 plan, which is a tax-advantaged account or an investment account towards tuition fees and college fees. The good thing about this plan is that you get tax advantages within your state and you can get deductions on your state income tax. And the great thing about these two accounts is that withdrawals are tax-free and any earnings and capital growth are also tax-free, which really makes this a very powerful tool. So as long as the funds within the 529 plan are used towards educational purposes or tuitions, college, books, etc., it's all tax-free. If you are thinking about having children, these accounts present really good options in way of investing in their future, as well as reducing the financial burden down the line. The next financial goal that you will want to focus on in your 30s is creating additional income sources. I know some people don't like to hear that, but the truth is, if you are only reliant on your 9-to-5 income, you are more financially vulnerable than someone who has more than one source of income. And so something to think about is creating an insurance policy or hedging your downside risk from losing your 9-to-5 income. And this could be as simple as selling your own creations, coaching, photography, tutoring, or even renting out an extra room in your house. There are many great options. You only need to decide what works best for you. And ideally, it shouldn't be something that will require a significant amount of upfront cost, but the key is to have a fallback in the event your main income stream stops. I currently have a few streams of income, as I've explained in previous videos, and I meticulously planned my finances before I left my 9-to-5. That does not mean that I now sit on my laurels and waste my days, but I have to admit that I do feel more grounded and more confident than I did when I only had my 9-to-5 income to rely on, which granted was in itself at the time a decent salary. But I say all of this to say that I want the same for you, because it could take one person to decide that your services are no longer required at your company, or that the firm is cutting costs, and boom, your 9-to-5 job is gone, and so is your income. The ninth goal to achieve in your 30s is having a strong network of good friends. Okay, so this isn't a direct financial goal, and it is more of a softer point, but your friends can and will most likely affect your finances directly or otherwise. In the biblical book of 1 Corinthians, chapter 13, verse 11, it says, "When I was a child, I spoke like a child. I thought like a child. I reasoned like a child. When I became a man, or woman, I put childish things away. Friends you've known from childhood or your 20s who do not want to evolve will hold you back. And those who are too expensive will also hold you back because you'll find yourself spending mindlessly every other night. But level-headed friends who can help you grow can be great for your finances. And they can also be sounding boards for critical financial decisions and hold you accountable in your growth journey. So that's it for my take on the 9 financial goals to achieve in your 30s. Let me know in the comment section if you are working on other goals and let me know how it's going. I'll see you in the next video. Look after yourselves. Bye for now.